The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, welcome on back to the Diagnostic Trading Hour. And I'm your host, Darrell Martin, here at TFNN. And make sure you listen to us online at TFNN.com under Tiger TV or on your mobile phone at TFNN.mobi. Let's check out where the markets are at right now. Heading down again after that monster down day last week, monster down week overall for the indices. Right now we got the S&P currently down 6.5. We have the Nasdaq down 33. The Russell's down 15.5, and the Dow's down 28. Gold's currently down just a point on the day. And let's look over at silver right now. It's pretty flat on the day as well. And copper is down about 0.25%. We got oil down $1.30, so down 1.35% right there. We got natural gas is currently down 4%. So after that monster up move, it's tearing on back. We got corn right now up just a few bucks. We got soybeans down a couple. Euro dollar currently is down 2 pips. Pound dollar is up 66. Aussie dollar is up 44. The euro yen's up 9. The US yen is up 17 pips. The pound yen's up $1.19. So the big mover on the currency pairs right there. And we got the dollar CAD is up 25 pips with the dollar freight up 14. All right, so let's check out where the market is at right now. And let's see what we got. Well, we got a busy week on earnings. And let's check it out right now. We got, let's see here, what do we got coming up? Well, today, of course, we got the big one. We got Apple, which is going to be released right around 4:35, and of course in the Nasdaq there. So that'll be a big mover after hours. Make sure you're hedged and ready and careful if you're directional on the Nasdaq, Apple, or even other tech stocks, as they'll usually be drug along with it. Tomorrow we have several high impact releases. We're going to have, let's see, Pfizer's coming out there in the Dow, and that will come out in the morning at 7 a.m. And then also at 7 a.m. is going to have AT&T in the Dow. So that will be released at the same time. So we don't have the exact expected time. Actually, let's see. Now, actually, it's after market is the expected time. So we actually don't have an exact time on AT&T at the moment. Looking on over at Comcast. Comcast is looking like it's going to be released in the morning at 7 a.m. Comcast there in the NASDAQ 100 and a large part of it. So, again, make sure in the morning you're ready for those big moves in the NASDAQ and in the Dow. Looking on over, and I'm going through the earnings first here. On Wednesday there, the 29th, we're going to have Boeing in the Dow. It's going to be coming out, and the expected release time is 7:30 in the morning. Then in the afternoon, we're going to have Qualcomm and NASDAQ. That comes out at 4 o'clock. So, high impact there at the end of the day. And then we'll also, let's see, have Facebook, which is newer. Now 4:15 was one of the times they listed, but now they've just updated their earnings call schedule to 4 o'clock. So expect an earlier release than 4 o'clock, and that could definitely impact it. We obviously don't have a whole lot of stats on Facebook's impact on the NASDAQ, being a newer stock, but we know it definitely will move it. Looking on over at Thursday the 30th, we're going to have Exxon Mobil XOM in the Dow. That's going to come out at 8:55 in the morning. And then in the afternoon, we're going to have Amazon coming out at 4 o'clock. We're also going to have Visa being released right around 4 o'clock. So it may actually do a wire release before then. That's in the Dow. And the big one, we're going to have Google coming out at 4 o'clock. So, definitely we did a trade last time the Google earnings release came out on the US Tech 100 during the Diagnostic Trading Hour. So just depending upon where the price is at, we may be able to do the trade at that time. But I'll at least walk through the trade for you. But that's one of my favorite trades every single quarter. We'll also check out Chevron. That's going to be at 8:30 a.m. on Friday, and a big component there in the Dow. So that gives you your high-impact Dow and NASDAQ component stock earnings releases, just ones to be aware of because they will move those indices. Now, let's check out what news we got. We looked at a couple things. So first thing, let me pull up. Let's see here. We'll go in, and I'm going to check out a couple trades. We may have ourselves a potential short here on gold, but let me open up one other chart, and we'll get that one going. And I wanted to look over at the yen trade that we had this morning to see, how it stayed within the stats. Okay, so on U.S. yen, pulling up 5-minute bars and checking it out. Okay, so right here. And let me load this other template I got up. There we go. And let's see here. Let me do one more edit. Okay, so going over and just looking at the prices and how they moved around there. What do we got going on? We need to look at this morning. The release came out at, let's see, we had 38 pip move, and what kind of move did we get off of the release when it came out? The release I'm talking about is the new home sales. Looking at the U.S. yen as a potential butterfly trade off that report. Again, that report came out at 10 a.m. So right here at 10 o'clock, and then just measuring the move before and after it. So right over here. And let's see here. We got down to a low. Got a pretty decent move. So a little larger than normal. That might be a little hard to see. All right, we'll try this one. There we go. That's a lot easier to read. And yeah, we got 52 pips, so a little higher than the average range right there. So depending upon when you get in and what strikes you got, that trade may or may not have worked out for you. I don't do a lot of butterfly binaries into the news, but whenever I see a lower volatility pair, now before it was very flat. So if we go and we check out the pre-news butterfly, we get a move from here to here. We have about a 22 pip move. So pre-news butterfly expiring at 10 a.m. when the report came out would have worked out great. The one after it, that'd have been pretty challenging. Probably would have had to get out of that trade or have a 1-to-1 risk-reward loss on that one. Okay, so that's our pre-news butterfly, but let's check out what else we have. We got tomorrow, we're going to have the preliminary GDP is coming out at 4:30. Okay, and the expected move on this, 70% of the time it breaks 50 pips within 2 hours of that release, and the average move is 70 pips. Therefore, we'll be looking to do either a straddle or a strangle. We'll get the 5, 6, or 7 a.m. spreads or binaries. Okay, and you can get it as early as like 12 or 1. I know a lot of traders who will get in on these really early and go to bed and sit there and take profits and just go to sleep. So depending upon how the market moves, that could work out really well for you. But anyways, just check that one out. So that's going to be the pound preliminary GDP coming out at 4:30 a.m. and a 70 pip average move, 70% of the time breaking 50 pips. And let's see what else we have. I'm trying to find the other straddles and strangles. Obviously, we're going to have the FOMC interest rate is coming out later this week, and that one is scheduled to be released at 2 o'clock. And we usually get some nice big moves off of the FOMC announcement. And a euro dollar, 95% of the time it breaks 50 pips. Pound dollar, 83% of the time. Aussie dollar, 75% of the time. So those are the only three pairs I'd really be looking at for doing this trade. On the euro dollar, the average range is a little over 70 pips. Also the pound dollar, a little over 70 pips. On the Aussie, it's a little smaller. It's about 60 pips on the Aussie dollar. But if you can get it cheap enough to still get a 1-to-1 in that range, it can still be a great trade. But the highest probability trade out of all of them is the euro dollar, highest percent of the time moving 50 pips, and the average range being 70. And the reason I focus on 50, pips is because I want to make sure that, there's basically a good enough risk reward to do a straddle strangle. So that definitely be my pick on that. Now, previous to that announcement, we got a couple others. You could do butterflies if you want to. I've done these on a couple of shows before previously where we went into doing butterflies, which is where you buy a strike below and you sell a strike above. Okay, so you're doing basically, you can call it's almost like an iron condor, but the strikes are, together, so it's a range bound. But iron butterfly, iron condor, whatever you call it. But basically, it's just a binary where you buy below in the money and you sell above in the money. And like I said, I've done a lot of these on our shows previously. So if the pricing is there, then you could look at, I'll give you the 90-minute, the 60-minute, and the 30-minute time slots. On the 90-minute, previous to the announcement at 2 o'clock. So if you're looking at 2 o'clock expirations getting in at, say, 12:30, then the pound dollar, dollar franc, they move 40 pips on average high to low. If you go over to the dollar CAD, dollar yen, they move 30 pips. The euro dollar moves 35, and the Aussie dollar has the smallest movement during that time of 25 pips. If we go down to 60 minutes, then we're going to get 35 pips on the dollar franc and the pound dollar. We're going to get 30 pips on the euro dollar. We're going to get 25 pips on the dollar CAD and the dollar yen. And we have a 20 pip high to low average on the Aussie dollar. So again, it's the smallest mover there, 60 minutes out. And then going down to 30 minutes out, previous to expiration there, then we're going to have euro dollar, pound dollar, and dollar franc all at about an average of 20 pips. Then we're going to have a dollar yen, dollar CAD right at 15 pips, and the Aussie dollar at 13 pips. So actually under 15. So again, the smallest mover at 30 minutes out. And like I said, often I'll watch at the 90, 60, and 30-minute intervals and see if I can get on a good strike. And what I can tell you, what I've learned, is do not push these trades. If you can't get them far enough apart, then just don't do them. Okay? And you're looking for the 2 o'clock expiration. And also the other big tip is to make sure on these that you close them a few minutes before, because sometimes like in those last couple minutes before FOMC, orders start firing off and you get some extra volatility. You don't want to get stuck inside that. Let's see. Now we got the next thing we got over here on Thursday. So for your weekly news planners, we got the dollar, U.S. here is releasing its GDP at 8:30 in the morning. And so what we'll be looking for, there's only a couple FX pairs that I really focus on, and that's a euro dollar and pound dollar. They both have a 70% average, high to low, after the news is released. 70% of the time they break 50 pips. So those are the only two I'd be looking at. And the pound dollar actually moves further. It moves on average 70 pips. So look at the two to see which one you might consider. Now, I'll talk about another combination on the Aussie where you can do the inverse and do what's called a strangled butterfly. So stay right there. We'll be back right after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rose, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome on back here to the Diagnostic Trading Hour. All right, so when we last left off, I was talking about there's a way to do it. It's called a strangled binary. Okay, so how does that work? How do you do a strangled butterfly? Well, we expect the pound dollar to have a large move, 72 pips. So we go in and we do either a strangle or we do a straddle. Okay, so it could be a straddle butterfly or a strangled butterfly. What we're going to do is we're going to do a straddle or a strangle on the pound dollar because we expect that large move, and it has a high percent of the time that it moves it, 71%. Then we're going to go over to the Aussie dollar, which only breaks 50 pips 30% of the time. And the average move is only 39 pips. So then we're going to try to do a butterfly on the Aussie dollar. If nothing happens, the Aussie dollar makes money, covers the risk, either most of or more than the risk, on the pound dollar straddle or strangle. If the market breaks out really big, the pound dollar, covers the loss on the Aussie dollar. But if they stay with the averages and the pound dollar breaks out and the Aussie dollar stays flat, you win on both sides of the trade. So it's pretty cool. You combine to get a binary butterfly on Aussie dollar. You got about a 40 pip range, and again, only 30% of the time does it break 50 pips. With a pound dollar, either straddle or strangle, which moves 70 pips, moves 50 pips 70% of the time, and on average moves a little over 70 pips off of the news. And so it's a pretty sweet combination to be able to put those two together. And it's nice, of course, when they both work out as well. So let's go through. We can check out a couple things going on right now, and let's see where the markets are at. So let me see here. I'll add one thing on here, gives me a little bit of market consensus direction, and change it up, get a little tighter on my time frame. Right there. Okay. And so what we want to do now is we want to look at expected moves. If you haven't played with the expected moves yet, then definitely, look at the deviation levels. I post them every day right inside the scanner at around 8:15 Eastern Time. They're posted in there. And so you get access to that with the Nadex scanner. And it'll be, again, as soon as you log in, trying to get my chart or my window small enough so you can see it. But right up here, you go in and you can see binary scanner, but you can also see deviation levels. And so we'll actually show you what the deviation levels are, which are the expected moves. About 70% of the time, we expect to stay within one deviation. That would be one whole deviation or a deviation itself, high to low. It's a deviation. You've probably heard of the bell curve before. Statistics and the highest probability. We want to focus on that higher probability. And every once in a while, it breaks out of that. But more often than not, it'll stay within that higher probability level for us. Now let's see here. So we got the yen moved down a little bit, then on back up. So we got actually a full deviation move pretty quick on the yen early this morning, and then it just bounced back and forth. Let's go through. Let's check out some of our indices that are moving and shaking again today. So after moving up about half a deviation, they pulled on back down to minus 0.5. Just started pulling back up again on the S&P. Again, that's after a one deviation retracement. So not a big surprise. Usually we expect a bounce or oscillation off of a deviation move. That's exactly what happened on the S&P this morning. We go over here. We can check out the Russell. So right here. And on the Russell, it moved up half. It moved down one. It hesitated from that one deviation drop, because when it dropped from 0.5 down to 0.5, it actually oscillated for about an hour. But then it moved on down another half on top of that. And now it's just bouncing right around that area, starting to bounce on up with the S&P. And now let's go in. Let's check out the NASDAQ. On the NASDAQ, pretty much the exact same movement as the Russell. Up a half, down one, bouncing around, and then dropped another half and pulling back. So all three of those so far pulling back up. And let's wrap up the indices right here with the Dow. And on the Dow, we actually just barely, not quite, got a deviation move, bounced off of it. So not as much strength going on in the Dow right now. But definitely expect some moves this evening. So with Apple coming up, we ought to see some definite volatility. Can't really straddle or strangle it. A lot of times people go, hey, how can I straddle or strangle, Apple with, Nadex, using the NASDAQ? The problem is the announcement comes out at 4:35. So I will give you a couple ideas on things you can do, and stay tuned. We'll talk about that here in just a moment.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, is going up in price again at the end of this month. Andy's weekly newsletter has delivered multiple profitable trades for his subscribers, even including a triple-digit winner within recent months. Right now is a perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy will also be hosting a subscriber event on Thursday, January 30th, Seasonality in Energy and Agricultural Commodities, that you can gain access to by simply signing up for a free trial to Andy Hecht's newsletter, the Technomental Commodity Report. A 30-day free trial to the Technomental Commodity Report, a free 60-minute live online webinar with Andy Hecht, which will be archived, and you lock in the low price of $49 a month should you decide to continue after your 30-day free trial. Offers don't get much better than this. Act now before January is over and this offer passes you by. Sign up for your 30-day free trial to the Technomental Commodity Report today. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're going back here to the Diagnostic Trading Hour. All right, so again, I always get the question, how can I trade Apple like you trade Google? Okay, being the sense that I'll go in and I'll do a strangle on it. The big advantage of Google is that its announcement comes out before the market closes. And since it comes out before the market closes, it makes it a whole lot easier to go in and obviously do a strangle or straddle. If you were trying to do that same strategy on Apple, you'd have an issue because the announcement doesn't come out until after the market closes. So you can't really do a 415 straddle or strangle on NASDAQ to take advantage of a big move in Apple. But you can look at a couple other things. One is you could look for after-hours movement on the NASDAQ. The other one, and this one is not really my favorite, but I want to show it to you just so at least you've seen it. And is you can go in, you can look at the binary scanner, you could choose the NASDAQ, okay? And then you can choose weekly contracts. And by doing so, you can see all the contracts that are available on a weekly basis. Now they're wider, but here, let's make sure we got just weekly showing up. I'm trying to get that narrowed down. There we go. Okay, so they're a lot wider though. Okay, so they're like 12 points wide per strike, and they're a lot further out. And so obviously they expect a lot of movement in the NASDAQ this week with Amazon, with Google, and with Apple coming out today. So it's a lot harder to pull off a strangle on the weekly contracts, and they don't move as fast. You don't make as much money from one strike to another. You could think of this as like your gamma if you're looking at options. So gamma grows as you get closer to expiration. What is gamma? Well, gamma is the delta of your delta. Well, what is delta? Okay. Delta is how much an option price changes with a 1 point move in the underlying. So if your delta was 70, then an option would go up or down 70 cents with a 1 point move in that underlying market. But when it moves up or down 1 point, now what's the delta? Because the delta was 70, the market moved up a point. Now what's the delta? Well, say the delta is 80. That means your gamma's 10. Okay? Because when it moved up, it went from a 70 to 80, and that change in delta is your gamma. Well, a binary price, if you look at the same strike and the same expiration, you're basically going to find out that if you look at a call strike and if you look at a call delta, that a binary is priced the same as delta. A binary is delta. So its delta and gamma, the gamma is going to be the same as well. So that's why it moves slower as it's further from expiration and a lot faster as it gets closer to expiration. Why does it have to move slower and faster? The simple reason is that it has to be able to end up at either 100 or 0 at expiration. The delta is going to be 100 or the delta is going to be 0 at expiration. So there's more time for that price to move. It can change, but when it's all said and done, when 4:15 rolls around on Friday, that thing's going to be 100 or 0. And so that gamma has to get faster and faster to push the price towards 100 or 0 as you get closer and closer to the expiration price. And so, but you can try to trade it directionally. You can use it. It doesn't open back up till 6 o'clock. Okay, so that's an important thing to know is you won't be able to trade the spreads or binaries on NASDAQ there till 6. But you can watch the two charts together. That's obviously very highly recommended. So, big movers like Google and Apple, along with if you're trading NASDAQ, obviously it's very wise to have those open at the same time because they're such a large component of that index. They'll help you. But, so you can trade it leading into it. I've tried to do a binary butterfly before it. It actually, one of them worked, one of them didn't work. You never know what that volatility is going to be leading into it. And but as you can see right now, we got Apple moving up, we got NASDAQ moving up. I can also go over and check out, Google, see what it's doing. It's also moving up. All three of those moving up. That's a good confirming indicator on NASDAQ that the NASDAQ is going higher. Until I get all three lining up, I may not be looking at doing a buy trade. So having, Google and Apple lining up with NASDAQ, that could give me a buy on NASDAQ. But as far as just trading the Apple news announcement, it's pretty tough to do. And even trying to do like Apple options can be very, very difficult because they're going to be the most expensive right before earnings. And then because there's an unexpected move. There's an expected move of a large amount, So since there's a expected large move, but it's not known what that is, that expectation will be priced into the options themselves and make the options more expensive. And a lot of traders who don't know this and try to go in and do, like, say, a straddle on Apple, buying a call and selling a put, they'll watch the market move in their favor, and they'll lose. They're like, wait a minute, this thing flew up. Why didn't I make any money? Because they don't realize that the option was really expensive. But once the move happened, that big move was no longer expected. And so the premium got sucked out of the option price. So maybe they made like $5 in movement, but maybe they lost $6 in implied volatility. And Vega is the implied volatility number. Like how much does a market change, an option change in price based on how much the implied volatility goes up or down? And it's actually the most powerful, what you could call, it's the Greeks. It's the most powerful Greek out of all the Greeks. It's more powerful than delta. It's more powerful than gamma. It's more powerful than theta. Obviously, a lot more powerful than rho right now since there isn't any interest rates. But, it can move, no matter how far delta and gamma can move, IV can overpower all of that. And people get what's called implied volatility crush. So the IV comes way down because the expected move that was coming has happened. There's no longer a big expected move. The premium comes out of the option, and they lose on the trade. And I learned that the hard way many, many years ago. I think it was like 8 years ago on a sprint straddle that I was doing, or strangle that I was doing. on some, just call and put options there on a Sprint earnings announcement. And only had to learn it once, fortunately. But it's one of those things you want to make sure that you understand that they get more and more expensive as you get closer and closer and closer and closer to expiration. And then over the next, 24 to 48 hours or less, that implied volatility will just drop down dramatically. And you can even see it on a chart. Let's see here. If I pull this up, we might actually be able to even chart it out for you. And let's see here. So here's Apple. And on a daily bar here in Thinkorswim. And now you can see how it's going up, up, up. But then watch right here. When earnings came out, how it dropped down. Earnings come up, drop down. Earnings come up, drops down. So it rises as it gets into it, and then it goes back down. And so that bigger move that's expected, the more and more and more it's going to move up. But also, as soon as it comes out, crush. So massive crush in price on the options. So be very careful when you do those. Is the quick, short summary of the story. Okay, so that's a couple, simple, easy lessons for you. Some that, many of you may know, but others could definitely help you out. If you don't know it, you want to know it. All right, well, we covered the indices and where they're at right now. Let's go in and look at our commodities. So right now we got oil. And oil is down a deviation on the day. Just sort of hesitating and starting to do a little pullback off of that. So looks like it, pretty much is spent and done and ready to move back up or chop around a little bit. This is where I'd be looking at potential in-the-money binary trades, and also, tie in, volume spikes and different things like that. There's a lot of different types of trades that I do. But the biggest things I look for deviation move, or one of the biggest things I look for is deviation moves. And then I like to combine that with the deviation levels. So when the market moves one deviation and when the market then, after that point, spikes, then I'll go in and I'll have the ability to do usually a great reversal trade. And to sort of putting all the different pieces together. Let's see here if I can maybe see if we got one happening over here. And I'll pull it up for you. I'll show it to you if we can get a good trade on oil, since we are starting a little bit of a bounce right there. So we'll see if I can combine it with a volume spike. And so to do that, I got to add in one other piece. So you can look at volume. I like to actually look at 5 and 10 and 15-minute volume. And if you have that volume spike at that level, that's, if you have all three, even better. But that'll help you get that, a lot of the times that needed pullback in order to be able to see it on the chart. So let's go ahead and I made myself just a simple custom volume spike indicator. So with some other traders that I work with helping me out. And we'll see what we got right here down at the bottom. If we got a volume spike. There we go. We got a 5 and 10-minute volume spike. Look at that. Market stayed flat. It's been moving up ever since. You actually could have got in even earlier. But right now, let's see. The market's up at 95.61. So we can go over here. We can check out oil, which is going to expire here in about 15 minutes. And just see, are there any in-the-money contracts that might be worth, putting a trade on for. So we got 2 and we got 230. Let's see, we got, let's make sure we're checking just the in-the-monies. There we go. So 230, we got a 95.50. Yeah, that's really pushing it, especially for $80 right now. Let's see here. Trying to see. We're at 95.69. That's actually not too bad. So if you're going in like on that trade right there, putting that on, then that would be a potential trade you could do. So, and what you're doing is you're doing an in-the-money premium collection trade. So the way that works, let's see. I got my. There we go. Keeps popping up in front of there. Go in. You grab that strike, and then the big key is you want to get out if it does come back to it. Okay, so, and here's all that has to happen for this trade to be profitable. It's pretty cool. The market could stay flat and do absolutely nothing, or the market could continue to rise, or the market could come down, and so long as it expires above higher than 95.50. In all three scenarios, we would profit. Now, to manage my risk, I like to get out when it hits the strike at 95.50. Now, the best time to have entered this trade would have been, there's two good places I would have entered it, and that's why I only did one contract here. I either would have entered it right here around 12.30 because the market just sort of oscillated right there right after that volume spike. And you could have even got back in when it did a little dip down right there, a little magnet price retracement. Or the second time would have been when I just got a long trend confirmation here at about 1:30. But it's moving on up pretty fast, so it's like the trade will work out pretty well. We're up a couple bucks. Like I said, that's just one contract. But I don't like to do a whole lot of contracts unless I'm going in on my original signal right there. But just to give you an example, and again, that's 95.50, 2:30 expiration. So basically what we're saying is that we believe that the market will stay at or above 95.50 right there. And I can even draw a line on the chart. We're at a price alert if I want to. And that allows me to easily just keep an eye on it. Price alerts obviously are very helpful when doing this. And let's see other things that I can put together. That's pretty much it. I mean, now you've got to monitor the trade and make sure you close it out if it comes back down. Time alone can also make the money for you. One of the tricks I've learned, let me show you this, as far as where to take profit at. What I'm going to do is I'm going to do my both in the money and out of the money trades, is I'll look at the pricing on the price ladder and go sort of where are they pricing the out of the money binaries. So like 96. So I don't want to try to get out of this thing at 98 or 99 because it's pretty much never going to get there. It's going to be 96 or I'm going to hold it to expiration. So if I'll go ahead and set a take profit at 96, I have the highest probability of getting filled before expiration actually comes up. Okay? And that will allow me to eliminate my risk, lock in my profit, free up capital for another trade, and not allow a winning trade to become a losing trade. So I will give up some profit by doing that, but again, eliminate risk, free up capital for doing another trade, not letting a winning trade become a losing trade. It's definitely worth it. And it's pretty simple. You just go in and click the button there, and then what you'll do is just set your take profit up at 95. There you go. And so now the take profit's in there. It's working for me. And as time goes by or as the price moves in my direction, it'll take profit. If it comes back down to my strike between now and 2:30, I'm hopping out of the trade. Okay? Take a small loss, move on, make it back on the next round. So don't worry about revenge trading. Don't worry about losers and winners. Just make sure that your inventory stays positive compared to your cost. And things work out. If you get greedy and you hold it and it gets down there and you're like, oh, maybe it'll come back, maybe it'll come back, then you end up wiping out like 8 or 9 trades profit, because this is a high probability trade. Therefore, it's going to be a low profit trade, and you got to combine the two. So many traders will go in and they're like, I'm all about the win percent. I want to have a high win percent. Well, the higher your win percentage, most likely, the lower your payout. Okay? It's not 50-50. And then now the higher your payout, usually the lower your win percentage. So you want that balance of probability and profitability working for you. All right, well, stay right there. We'll be back right after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, going back here to the Diagnostic Trading Hour. And so we got a little oil trade, just sort of flattened line in there, which is fine. Flat, up, down a little, not too much. Work out just fine for us. And basically just making time decay. So pretty simple trade to do. And so far up, simple $7. They'll buy you something at McDonald's, I guess. And but you can do 1, 10, 20, 100, whatever you're comfortable with. Now we go over. Let's check out natural gas. We just rolled over on that, so let me go ahead and go to natural gas 03-14. Check it out. So natural gas also bounced. Look at that, right off that 1.5 deviation level. Just a perfect, nice bounce up there. And these are some great moves. Gotta love the markets when they're moving like this. It doesn't get any better than this. You gotta love it. Let's check out silver. So silver, not as big of a move today, but quiet for silver actually. And just barely broke that deviation level high to low. Sort of choppy overall. Silver's a strange one to trade. A lot of people love it. It's usually not my favorite instrument personally. But anyways, let's see. We got copper. Copper's pretty smooth. Got some nice, good trends on it. But didn't even hit a full deviation on its move today. And let's go down. We'll look up at... let's check out our ags. We'll go down to corn and soybeans. So on corn, we actually did pull a deviation high to low. So right on down, flew back up. See these volume spikes happening now at a 1 deviation when it's finally hit. And then notice how the market just flatlined and leveled back off. So that'd be an area where you'd be looking to do a premium collection trade, potentially in the other direction on that trade. And now let's go down. We'll check out soybeans. So soybeans right here. What we got going on it. And looks like it did get its deviation. So, but again, it's a high to low. Sort of a choppy one overall. Got a couple little decent trends, but by the time they signaled, there wasn't a whole lot of move left in them. So ags, even though they are great to trade today, not as impressive. We'll check out a few of the currency pairs before we wrap up here. We got the Aussie dollar. And on the Aussie dollar right here, looking at this, looks like we did get our deviation high to low pretty early because it moved down quite a bit and pulled on back up. And now it's actually sitting up at the 1 deviation, ran up to 1 deviation, got that volume spike, flat line, pulled back out, finally turned back around. And but did this sort of oscillated between 0.7 and 1 for most of the day, coming back down off of a 1 deviation at the moment. But pretty flat. I mean, we're sitting right up there around the deviation level. We'll go in. We'll check out the euro pound. So not usually the biggest mover, but it can be somewhat simple to trade just because it doesn't move too big too fast. And so we can see right there, just moving down, and just chilled out and at the 1 deviation level. So right there, just at the 1 deviation, didn't do anything else. I mean, hopefully you can see how much this helps you in knowing what to expect. And where your trades are sort of, probably done and cooked for the day. We can go in, we can check out the euro yen along with it, and see some similar price action, except for it ran up a deviation, pulled back down, and bounced right off a settlement. So, I mean, it's the perfect bounce right off of it right there. And let's check out the euro dollar. So we got euro pound, euro yen, euro dollar. Euro dollar up half a deviation, down half a deviation, and flatlining right there at settlement. So plenty of good trades out there, lots of nice moves, and I gotta love earnings season, picking things up. So make sure you're checking out Nadex. Click on the banner there at TFNN.com, and under trading you get a free demo account. And make sure to call in with any questions. All right, y'all have a great day.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.